Hey everyone, this is Mark McLoone with Retail Investment Group, and I'm joined by Stephen Davis. And today we had the opportunity to speak with Steve Stein of Tauro Capital Advisors. On this call, we discuss what the lending world has looked like the last few weeks, how has COVID-19 impacted pending transactions, and what the forecast for the foreseeable future is. If you have any specific questions or comments, please feel free to reach out. Hope you enjoy the call and stay safe.
Steve, first off, thank you for hopping on the call with us. We know how valuable your time is, but if you would like to do just a quick, brief intro on yourself and your company, and then we'll jump into a few questions that we have for you.
Oh, sure. My name's Steve Stein. My company is Tauro Capital Advisors, which I established with my partner, Scott Lee, in November of 2017. Prior to that, I spent 22 years at Marcus & Millichap, both as a broker and manager. When I left, I was overseeing the Los Angeles office and a number of other offices in Northern and Southern California, and then Phoenix, Arizona as well. And when I left Marcus & Millichap, I joined a company in Century City called George Smith Partners, where I focused on capital markets. And then after a short stint there, I was brought on by one of the developers I was working with to provide financing with, to come in-house as somewhat of an outsourced CFO, and started Tauro Real Estate Investment Services, a little different than the company as it stands now. But again, in 2017, I reconnected with Scott after probably 10 or 15 years, and we formed what is now known as Tauro Capital Advisors. Tauro Capital Advisors is a true advisory firm on the capital market side that not only sources both debt and equity, but we provide services that will help clients navigate both good and bad markets as it relates to the capital side. And so that's Tauro Capital in a nutshell.
We have 3 questions, so Mark, take it away.
Very good. Yeah, so I think, one of the biggest questions that I have is, what does the lending world look like in the last few weeks as far as deal flow? And
yeah, it's been somewhat of like on a teeter-totter in a sense that a few weeks ago we had the 10-year Treasury, which is the typical benchmark for most lending, down as low as, below 50 basis points, which it's never been in its history. And so for a short period of time, interest rates were to some extent on a free fall, and then lenders started to implement floors. And then as the COVID-19 pandemic started to affect all the markets, lending has slowed down, but it's not to a grinding halt. And that's really important for people to really be mindful of, because I've talked to borrowers who have said, hey, I've heard lending has stopped. And I asked them why they say that. And they say, well, I talked to my lender, and my lender said they're no longer lending or in the market for loans. And that's probably true, but that's not the market. And so one of the biggest values that Tauro Capital Advisors provides to our clients is that information that is true, and the misinformation we kind of sort through for them, so that they understand that the market has slowed down, lenders have tightened up a bit, and they've also, modified their requirements. So for example, we are working on a single tenant property right now that is a drugstore, and the lender is open to 65 to 75% loan to value. But as one of the covenants, they're requiring the borrower to have a cash collateral account equal to 1 year's rental payments, which will be released after 12 months if there is no interruption. But in essence, the lending markets are still there, and we're still finding good appetite for most product types across the country. Obviously, hospitality has slowed down to almost nothing. And then if it's in the retail space, it's really going to depend on who the tenants are, what their leases look like, and kind of what the environment is and the geographic that it's located.
Nice. So, more to current day, how does the pandemic virus impacted pending transactions you have currently in the queue?
So far, it hasn't affected any of them that are in the queue. To give you an example, we closed last Thursday on a Walgreens in Garden Grove. And this Walgreens has just over 10 years left on the lease. The quirky thing about it is it's sublet to Dollar Tree, and we have no information as to what Dollar Tree is paying Walgreens. It makes sense to believe that they're paying somewhat less than Walgreens, maybe even 50%. But with that said, we were able to fund that loan on a refinance at 3.85% fixed for 10 years, 30-year amortization.
Very nice.
Yeah, no, that's definitely good to hear. I guess the third and final question is, what would be your forecast moving forward with lending and everything that's going on right now?
I think the best advice that we can give people, and that would be the forecast, is to proceed with caution. There is still capital out there. I would say on the equity side right now, that's on the sidelines. There's no real equity sources available for any product type. But people should just proceed with caution. I mean, interest rates are still historically low. I mean, you think about, Stephen, you know this because when we both got into real estate, and I got in there a little bit earlier, I started, interest rates were 9%. And, people who were around or are around when Jimmy Carter was president, it was 18%. And so for someone to really, not move forward because they can't get sub 4, but they can get, mid to high 4s, really doesn't make sense. Will interest rates get back down there? Possibly. Well, we're still talking about historic lows right now, and it makes sense to take a look at, your current debt, reevaluate that, and look at whether it makes sense or not to do that. And we do that all the time, including evaluating even by paying our fee, if it makes sense. And if it doesn't, we'll let the client know. So if they're at a 4.5% interest rate, the best I can do is 4.25, and then add our fee into it, they're not in a better position, we'll tell them to keep that loan.
Right. Yeah, good stuff. Appreciate you getting on the phone with us. Any other, closing remarks or things you want to add?
Well, just be positive. As they say, this too shall pass. It's not going to be the end of the world. The best thing to be is, shelter in place if you need to, stay safe, keep the eye on the ball. And, the beauty about real estate is it really doesn't move up and down as quickly as the stock market does. It is really a long-term investment. And again, you just have to be mindful of, that if you have tenants, they have, they're struggling to pay their bills just like, you are as a landlord. But at the end of the day, if we just, work through this together, we'll get through it.
Excellent.
Good. Appreciate it, Steve. Thank you.